Hi, everybody. Good illiquid turnaround Tuesday. Hi, Jays. So if you're just watching how things are trading, there's, like 50 cents, 70 cent in between trades in the gold. I'm attempting a gold short here today for turnaround Tuesday. We'll see. Silver also in this range. So up to the 50-day moving average, still my contention. These are not the lows. That this is not the low, that we get one more shot down. And the Aussie finally got to the 72.60 level I was looking for resistance, so trying that too. See what happens. If the dollar breaks down, then, it's not going to work. But, I mean, look how long the dollar's moved sideways without breaking down. It looks like the Russell did for 8 months. Anyway, maybe what we're going to do is just finish this off into early next year, head up towards that 98 level. That would be fine. Here's the amazing beach ball. RSI. Oil is in starting wave 3 target 85. Okay. I think that would surprise some bears, 85. So that's a marginal new high up here. All right. So that should also help equities, right? And maybe one more dollar high helps equities as well. Stability. I know everyone's trying to get the correlation right, myself included. So think about it, though. All year the dollar was strong and the market had a good year. So we'll see what happens on those two shots. I sold gold at 1817.50 with a $15 stop, and sold Aussie at 51 with a 65 pip stop. And thank you for your opinion, Majid. In fact, that kind of lines up with what Shy Girl's talking about, but she doesn't think we get there 85.95 till the spring of next year. Okay, and the gold silver ratio did peak out last week, so continues to fall back under 80. There could be a failing rally. I'm going to be interested to see what happens should my guess of another wash in precious metals happen. And I'm still monitoring the yen. Still really hasn't done anything wrong, and still looking for new highs for a third drive. Maybe yen peaks and the dollar peaks around the same time. So just something to keep in the back of your head. And maybe what you need to do is start planning out 2022. And that means getting out your monthly charts and weekly charts and looking at how the year finished and the important levels going forward that could change market direction. To be spending your time doing that and having a plan for next year. Okay, so the plan for next year is to always have a plan. Okay, write that down. My plan for next year is to always have a plan. Okay, and no more of this, hey, this looks good, I'll give it a shot. Or if I think it's going to here, I may as well, short it to take advantage of it. Anyway, here we are. If I extended this line out, it would probably be right here at the breakout too. So we'll see. Part of the metal short is that I still think there's more left in the yen. I'm talking a lot today because Stell's out, and I think it's just Blake and me, and maybe Steve is around again today.
Yeah, I think Steve's popping in too.
Maybe.
Maybe not. But you know how it is with Steve. You know how it goes with Steve. If you let Steve go, then he goes.
Yeah, I've audited his economic courses for 4 years. I think Blake, that you and I will get a BS degree. Which
I could be an economics professor here at Yale. With all the teachings I've had from Steve for the last few years. How are you guys doing this morning? Happy Tuesday.
Yeah.
Happy Tuesday.
Yeah, Stelios is out. He's got family. His brother is visiting in from London, so he's out. He said he was at the Acropolis yesterday, the first time in, what did he say, like since 1987?
Something like that, yes.
Yeah, that's cool. It's funny. Well, it's not funny. I mean, I live in Arizona, so everybody's like, oh, if you're European or you're Asian or you're coming from anywhere in the United States, really, and you go to Arizona, you think, oh, I'm gonna go to the Grand Canyon, because that's what we have in Arizona, right?
And quite a ride.
And I've been there twice in my life, and the last time was probably taking somebody there 10 years ago. And you're
going to go again next year. I promise.
Next year when Steve gets here in October, I'm going to take him to the Grand Canyon. It'll be the first time in like a decade that we get to go see a big hole in the ground. But the thing is like, when you live there, right? I love the Acropolis, and that's the first place that we go when we get to Athens. But when's the last time you've been there, Steve?
You're forgetting that I have a young son.
Oh, so you just let him run around and break like?
No, I mean we are at the stage that we take the kids.
Give them culture.
Yeah, exactly.
Teach them about their heritage
because they've now reached the age that it's actually worth taking them somewhere because they understand, sufficiently enough. And so you want to introduce them to things. So, during the past, let's say, couple of years, we've taken the kids, usually, with schoolmates, etc. So we go families to, several places, including the Acropolis and the Acropolis Museum.
Okay, so
before that, exactly as you said, Blake, the last time I went was like 10 years before that when I had friends visiting.
right. That's usually how it works. Hey, Dale, I heard you talking about the Aussie dollar. What's really, it's a bummer for me. I was long the Aussie
at the low.
Yeah, literally at 70 cents. And I got out of it like 71.30, somewhere around here. After we peaked at 71.90, we dropped back to 71 cents.
Well, you flattened out for the holidays, Blake.
I got out for the holidays. That's what I
felt like you wanted to get out. It wasn't market related.
Yeah. Well, yes, exactly. That was it. It was like, I really thought through the Christmas holidays, we were going to be somewhere around here. And it's like, okay, I had a great gain and I wanted to just, avoid the up and
celebrate it, a drink.
Yeah, and I really wanted to enjoy the holiday. That's right, and so I took it off the table, but I'm a little bummed out because I didn't get back in, and I knew I needed to get back in. I just actually, you know what? Now that I take that back, I got out somewhere around here because I was waiting for this to happen, and I was hoping to buy it closer to down here, and I just never got the opportunity. Because you're right. I wanted to take it off ahead of the holiday, which, like I said, it bums me out a little bit that we're up where we're at because we're at levels that I thought we were going to get to. And, you mentioned the 72.70. I do think that this is pretty key resistance. And let me point out a couple of things here. First of all, you have the underside of the previous channel that we were following for so long. We finally broke down, back around the U.S. Thanksgiving holiday. And now we're challenging that breakdown point, the underside of this previous channel, 50% retracement, 127% extension of last move lower. And on top of it, all the relative strength that you see right here is divergent. We're not even overbought intraday. So, but it is divergent, especially if we stop where we're at. Like, let's say we stop somewhere around here, which don't forget, it is Tuesday, and it could still be turnaround Tuesday. I don't expect it today because of there's very limited flows. And people always ask, like, why do stocks grind higher around this time of year? And, if you understand, like, I'll just give you one very, very simple example is, the constant inflow of money in the US from like retirement flows and fund flows. There's just inflows constant in US equity market, especially in an uptrend like we're in right now. You take like just anybody, like my cousin, he's a young kid, young kid being he's 30 some odd years old. He's an engineer. He plows like literally like 30% of his income into the equity markets, into retirement plans every month, because he doesn't need it for anything else. It's so he's been doing that for, years now. But that's like just an example of like, just people are constantly, there's constant inflows. And right now there's nobody fighting it. No one's going to fight it this time of year when there's a Santa Claus rally, or when it's typically, low volatility. You don't want to short a slow market. There's going to be just a grind, especially in North American trade. So anyway, with that being said, the Aussie dollar could theoretically continue to grind up towards this resistance, but it is Tuesday and we've had a nice little rally. The S&P is approaching that 127% extension we talked about yesterday when we broke out above this high. If you are not familiar with that, you can just go to, the Forex Analytix platform. You can go to the S&P 500 and, talk about, yesterday, the S&P is nearing all-time highs once again, looking for a move, the 48.15 level. Well, here we are. We're basically there. So, and, relative strength is pretty overbought. So would I be chasing the markets at this, at these levels? No, but I sure as hell would be very careful fading it. I keep seeing people, even people in our community, shorting the stock market, up at these levels this, week. And it's like, and last week, I'm like, dude, you can do whatever you're going to do. Just be really careful. Keep your stops tight. Don't get into trouble, because when the markets move, it's hard to, if you get yourself in a pickle, it's hard to get yourself out of a pickle in this environment when there's very low volatility. So that's just something I wanted to point out. I do think that we are at risk of, probably consolidating around these levels, maybe today, before we, continue to stretch our legs further towards the 161% extension or channel or previous trend line resistance of the S&P. If you look at the S&P and you just go through, the 2020 highs to previous 2021 highs back in May, through resistance, it should take us right up to around 48 or 4850, 4900. So, be really careful fading the market as we're literally breaking out of the highs from late November. So, like I said, just be really careful trying to fade this stuff. I just think that the market is bullish at this point until, we get back below this breakout point. So if for some reason the stock market drops back below 4750, then you can start thinking, otherwise. Now, I do want to point out a couple of things though. The euro is struggling here at resistance. And you can see this is triangle resistance. We've been talking about it for the last week. And, more importantly, and this is the thing that scares the crap out of me. And Steve, I'm going to take some comments from you here in just a second. But one of the things that scares the hell out of me with the euro is that, I was playing this on the long side last week. I was buying it at 112.60. I think I got out of it like 113.10. I was like buying here somewhere over here, like my average. And I think I sold it last week, like somewhere around here. I didn't make hardly anything. And it was a very frustrating to be long. I've been expecting some sort of bounce back to the 114, 115, trend line up here before we start resuming the downtrend. The problem with the euro is it's not even bouncing in this environment. And so what happens when the environment changes? What happens when we see some sort of risk off activity? Will the dollar, really start to pick up steam once again? I mean, you look at the dollar index and, here we are just poised at highs. So you got to be really careful with that, especially you start taking the sterling, which has had a nice nice rally back. I do think it's going to stall anywhere between where we're currently at and 135. If you saw, that was the chart of the day for me for yesterday, was the and that's in our blog, guys. You don't have to be a member of Forex Analytix to read that. That's in, that's the blog. I tweet it out. Our company tweets it out, our Forex Analytix handle. So you can read the analysis from yesterday, of what we're expecting out of the sterling. But the problem is that, intraday, relative strength is becoming a little overbought here, and we're in between fibs, but I do expect that, we're going to end up stalling here. And so if you think about the euro not being able to break higher, then you got the sterling that's kind of stalling. Then you got the Aussie that's, coming into some pretty key resistance. Then you have the dollar Swiss that's at, 2021 triangle support. This is a symmetrical triangle. Steve's talked about it a lot in his weekend analysis. And, here we are, at this is the 2021 trend line, and 200-day moving average is right here. We're literally at support on the Swissy. You got Norway at, breakout point support. You got dollar Mexican peso triangle, channel support. You got the Rand at the inverted head and shoulder pattern, bouncing aggressively today, by the way, off of the neckline here at the inverted head and shoulder pattern, or triangle breakout, whatever the hell you want to, you can call it whatever you want to call it. And you got the dollar yen that's insatiably bid at, at its range highs. There's a risk that the dollar bounces, near here. And if it does, is that going to alter, the way the market is viewing things? And then, to point out, I should point out this, as Dale brought it up a little bit earlier this morning when he started, you got precious metals, you got gold even though we have a bull flag pattern, we're still up against really key resistance here at a 50% retracement. Can't break above that. Silver's trying, to, form a double bottom, but still,
silver's stronger than gold.
It definitely is stronger than gold, which is good for precious metals. If you trade precious metals on the long side, the silver gold ratio, whenever silver is outpacing gold, that's a good sign for precious metal bulls. But it's still, I still worry because gold isn't doing a whole lot. And then you got yields that are stationary, but what if yields start to percolate a little bit and start to catch a bid, on the 10-year or the 30-year, you start to see, this consolidation break higher, then that's going to spur some dollar strength. And that's what I think you have to be really careful with if you're trading currencies right now. The dollar's at very key support pretty much across the board. So be careful with that. Now, Steve, I want to get your opinion here, on the euro. I look at it and it's trading so damn heavy and surprisingly has not been able to bounce. And one of the other things I need to mention before I take your comments here is that the euro, and one of the reasons why I've been buying it down at these levels, is we have this 12-year trend line here. This is 2008. This is the high from 2014. This is the high from 2018. This is the breakout from 2020. And we're back testing that trend line. That's why I keep buying it down here. But the fact of the matter is the euro is just not bouncing, other than, it stabilizes, but it's just not bouncing. How do you feel about the euro at this stage? I mean, it trades like heavy.
Call me conspiracy theorist, but I've learned
you are a conspiracy theorist.
No, I actually.
Yes, you are.
What I've been doing though for many years is I pay very close attention to what is being said, who says it, and what changes in the language and tone of, regulators, central bankers, etc.
So you're like one of the only people that listen to Christine Lagarde during her press conference.
No.
Very good. All right, I'm glad I know that now.
Okay. And I also try to read between the lines. One of the things I commented multiple times when it happened was the resignation of the German central banker Weidmann, which happened.
Weidmann?
Yeah.
Weidmann? Weidmann? Yes. Go ahead.
So the moment that happened, and he claimed personal reasons, if I remember right, as the excuse, I stopped having any hopes that the euro can recover, soonish. The reason is because I believed back then, and I still believe it, that the reason that most probably he resigned was because he didn't agree and didn't want to follow anymore this type of monetary policy. And the fact that he had to resign told me that, at least that's how I interpreted it, that there was already a decision that the central bank, the European Central Bank, is going to continue in the same path of monetary policy, despite the already obvious inflationary pressures that we had when he resigned. So back then, I lost any faith that Lagarde will, in essence, try to move and find herself in front of the curve. I knew that the Fed wouldn't do it, but it was more than obvious that the ECB wouldn't do it either. And now we know that the Fed at least has acknowledged the problem first and is showing some intention to do something about it. So until I see some kind of a change from the side of the ECB, I'm not optimistic at all, Blake. And I think that the technical picture that we see, which is a bearish consolidation, most likely, you want to call it a triangle, you want to call it a range, doesn't really matter. I think it's also telling the truth, having to do with what is the short-term fundamental picture. So I'm 100% with you.
Yeah, and it's like, the way I've been viewing this is, and this I kind of giving you guys like my overall view of, I hate doing like 2022 look ahead. I hate doing that because look, I'm a trader, and just like you guys are, and I take information in as it comes. And so my opinions can shift from minute to minute, but realistically, like day to day. And I could be bullish one day and you get some data thrown at you or a shift in rhetoric from a central bank, and then expectation shift, and you've got to shift with it. So for me to go to, I'm looking at the dollar to, peak in 2022 and roll over when it hits 100, and then we're going to go to 80, and then we're going to bounce from 80 and we're going to go over to 60. We're going to bounce back to 90 in 2024. It's like, you're just trying to make a name for yourself and guessing, like, all these forecasts that you read. I mean, think about last year at this time, every major bank was bearish the dollar and bullish the euro. Every single one. There wasn't one major bank. You guys, I've tested and all of you to bring me some analysis that you read in 2021 from any major bank that they were bearish the euro or bullish the dollar. Not a one, not a single. And I read most of them at the end of last year. So that to me, that type of forecasting is really difficult. But what I was thinking in my head, how I wanted to play it is, bounce back to 115 in the euro. I'm going to short it. I'm going to look for, the euro to move, down to, 111, 110. And I wanted to be a buyer somewhere down here technically for technical reasons. But, the more we hang out at this 113 level, the more at risk we are for just a straight shot move down to 110. And I really didn't think that was going to be the case, but price action really drives my decision making.
Plus, we're not oversold anymore, Blake.
No, we've
sideways, and RSI is neutral now.
RSI has completely gone neutral now. So now we're back to mid range. Now we are free. Ever see? I know if you're not American, you don't see this, but I would think about it every time. There's an old Southwest Airlines commercial. It says, you hear the ding from the airline, the seatbelt ding, the ding, ding. And it says, You are now free to move around the country. That's like their That was their slogan for so many years. You hear this, ding, ding, you are free to move around the country. So it's because it's cheaper to fly, all around the US. Anyway, so whenever I see relative strength, go back to mid-range between, the 30 and 70 mark in relative strength, then I've realized, hey, this currency is now free to continue lower if it really wants to. Like it's worked off all the oversold conditions that we were seeing back in November. As Dale just pointed out, relative strength has now drifted back to mid-range. We are now free to, resume that downtrend in relative strength. We could resume that downtrend in price. It's not oversold anymore. So and this is when, people that look at relative strength only or oscillators only, this is where they start getting into trouble, because they're like, oh, we're oversold. I'm getting, mega long down here. Relative strength was divergent. We're not going down any further. Just remove here. Relative strength is was oversold. Now we're divergent. So I'm going to get long, hell along the euro, and it's trading at 113.30, and then they end up getting smashed all over the place and down here. And that happens a lot, to traders that only look at technicals, and they don't factor in the things that like Steve is telling you today. So those are things that that I think about, especially with the euro and where we're currently at now.
When you think about it, who's the most hawkish bank in the world
right now? Well, I mean, it has to be the Fed. Well, let's say
the BOE really did something.
They are the most hawkish, and they're probably the only ones that can move. They can move substantially.
That was a tightening. What we're doing isn't, right? So they're the most hawkish bank on the globe.
Yes, I would agree with that. And again,
among the developed countries, obviously.
Yeah, of the developed countries, right? But they are the ones that can move the most too, that have the flexibility to move the most at this point, based on inflation expectations and growth continuing to be strong and employment.
Well, why did Powell raise rates a quarter like the BOE?
Well, I think he's trying to walk a fine line between buckling the equity markets, even though they're at all-time highs. I mean, he still plays the sentiment game like any central banker, right?
That's why.
Because once sentiment changes, we've seen it. Dale and I have been in the markets way longer than most people at this point in time, and Steve's done his he's getting on a couple of decades of experience too. The thing is when you've been in the markets as long as we have. Dale's been in since the T-Rex went down.
1925.
Yeah, T-Rex went down back in the olden days.
I saw the asteroid come down.
I know.
I got stopped out of everything, man.
The fact of the matter, though, is when you've been around, long enough, that when sentiment changes, it's hard. It's like a genie that you can't put back in the bottle. People always talk about like inflation. Inflation is that. Well, Volcker, or was it Volcker? Volcker really changed that, right? Is that the one that he was pre-Greenspan?
The one that
Volcker,
did that took rates 20%.
Volcker was,
yes, that was
Reagan.
He's the one that put the inflation genie back in the bottle. So we know how to do that. That's why every central banker is like, we can let inflation run hot because I know how to deal with it.
There is a big difference. We knew how to do that back then. We know how to do it today. The problem is that back then it could be done. Today, I very much doubt it can.
Again, it's perception. It's perception, right? Whether they mechanically could do it right now and whether it work is two different. This is a completely different conversation. But what I'm saying is what people don't know how to do. Well, and actually the central bankers think they know how to do it again is just, we just, add QE and loosen policy as much as we can. That's how you change sentiment. But you have to be really careful about sentiment because once sentiment changes on a consumer level, in a consumer-driven society like the United States, you do have a problem. And so that's, going back to Dale, your point is, why hasn't the Fed just raised rates? Is, he's trying to, he's trying to He's doing a nice little juggling
Yeah.
match. Speaking of which, speaking of juggling, Sharif asked about the US dollar, Turkish lira. Steve, did we miss it? I mean, I know you were waiting patiently for Erdogan to die so you could start buying the lira, but did we miss the boat here? I mean, that was a pretty big move from that spike high. What do you think about the lira? Since you're in Greece, you're right next door. You can have a better feel than I do here. So
definitely, technically speaking, a huge move. Now the thing is, other than the promises and the rabbit they pulled out of the hat, has something substantially changed so far in the economic policy that Turkey is pursuing? No, for the time being, they've just promised that they're going to be compensating people for whatever they lose from inflation that exceeds the interest rates that the banks pay. To begin with, the reported inflation is 21%. The real inflation is being calculated to be somewhere in the vicinity of 80%. So basically, it means that they won't even compensate people for even a fraction of the money they're losing. And I think sooner rather than later, that's going to be more than obvious. Second of all, Turkey has already diminished its ability by reducing substantially during all these years their foreign exchange reserves to even do that if needed. So basically, I want to caution people, because there is a huge chance, unless this first attempt, which temporarily has worked, ends up being accompanied very fast with big changes in economic policy, I think that you can sooner rather than later see this move completely be retraced. So pay very close attention, not to what has happened so far, but if something will change from this point forward. And for the time being, I haven't seen something.
Okay, thanks, Steve. So in other words, you could see bounces, and maybe look at potential failure points up here. And let me just point something else out with the lira. Obviously spreads have tightened now that we've come back down here, but when we were up at these levels, I couldn't trade the lira. If I bought $100,000 in lira, I was down $1,000, just like right out of the gate. So there was no, for me, there was no sense in trying to trade that at all. And so, now spreads have tightened, but they're still very wide. It's kind of like having a 30 pips spread in the euro dollar. That's what I'm seeing as a retail trader. If you look at an institutional platform, a lot of institutions still won't. A lot of like funds and portfolio managers can't even trade the lira. A lot of banks are still kind of disabling the trading. So be very cautious. When you have to pay a huge spread to trade it, I mean, you are disabled right out of the gate. So just be really, really careful. One last thing I want to mention really quick. There's a question, and I know we've got a guest coming on. Christopher asked, how much pips would you target during this year-end trading period? Yeah, I think you're asking the wrong question as a beginning trader. You sound like a beginning trader. I don't want you to be offended by that. But I think you asked the wrong questions in this time. When you're in a period of very low liquidity and very low volatility, you got to be asking yourself, how much am I willing to risk in this environment? Because if you get on the right side of a trade, you have to consider it more luck. And if you're going to get into a position, just say, hey, I'm going to get in the position here because I, had strong conviction that I want to be long the dollar or short the dollar or whatever the hell you're doing, and get into a position, put in your stop and say, if I get stopped out, I'm only risking X. Try not to be I try not to trade during this period. I got hit on a bid in the US dollar Norwegian krona today because I had a long-standing bid there for the last 2 weeks. I'm not very active right now, and I don't plan to be this week. Okay. So, and the one best practice during this time period, when you're in a very low liquidity, low volatility environment, do what I like to call target trading. So what I mean by that is look at areas like, on the Aussie, you go, oh, I really want to be short the Aussie here at the, 50 DMA, which happens to be at 72.75. There's the 50% retracement, 127% extensions right here. Previous support should act as current resistance. I got quadruple confluence of an indicator or of indicators right here. I'm going to short here with a 20 pip stop, and that's it. So in other words, you are saying I'm only going to trade the Aussie when it reaches this spot. And when I trade it, I'm going to take the trade and I'm going to put my stop in here. And if I get stopped out, so be it. Don't think about, oh, I'm trying to make 100 pips during this week. And that should be an average that I look for during this week. I don't even think like that. I think about how am I going to reduce my risk during this period? That's how you should be approaching this time right now. And I hope that you take that advice to heart. Okay?
Our job is not dreaming about profits; it's managing risk.
Yeah, and Christopher said you're right. I'm a beginner. Sorry for asking the wrong question. No, don't be sorry. I'm glad that you're here. And as don't ever be sorry about asking questions like that. I think that's a great question because it gives us an opportunity to kind of explain to you, our thought process, and that's just taking it. From somebody like I've traded for 25 years now, and I've traded, very large accounts, and I've traded, my own accounts starting off. I've done it all. So other than work at a bank, but that's why we have like Cayman and we have Ryan, even though they're both off and not here right now, that have been in Stelios, that have been bank traders. That worked for big, major banks for decades at a time. That's why they're usually here too. The whole team here we've run the gamut, in the market. So please ask those questions. Those questions are the best questions in my opinion. Anyway, hey, Dale, I know it is time. I want to just also, whoops. Why did I do that? Click the wrong thing. Click the wrong button there. Make sure you guys take a trial of Forex Analytix. The reason why I say that is because we are in the period where you can actually take a trial. It's only $1 for 10 days to jump in our community. This is what our community looks like. So this is our general chat rooms. This is more of the macro chat room. Here's our trades room where we talk about what trades we're in. The news and research room where you can get articles and write-ups that bank research that people get. It's obviously not very active right now because there's so many people that are on holiday, but to get in our community, it's only $1 for 10 days. You should do it now because I think, and Steve would correct me, somewhere in the beginning, the first week or two of January, we offer a substantial discount. We do it once a year, where you can get substantial discounts, but we take away the trial. So you can't, take a trial for one day. So we have probably the most active trader community, at least in the currency market. So come in and join us. And I'm going to leave it at that. Dale, it's all yours, buddy. Sorry, I've ran a little long today.
Okay, Blake, thank you very much. Steve, Blake, thank you.
Thank you, Dale, Blake.
Yeah, thanks, the point the guys are making is don't trade money, trade markets. Okay, there's a big difference. And Alejandro, welcome back to F.A.C.E, my trading warrior brother.
Hey,
thank you for your patience, buddy.
No worries, I'm all good. And it was interesting to listen to the other guys share their views on the market.
Yeah,
and I agree what you just said there. Trade the markets. Yeah. In my case, it's more trade patterns.
Yeah, there you go.
Yeah.
So you're not thinking in terms of dollars. I need to make a certain amount of dollars. It's what the formation tells you is the potential for the move, not any type of monetary goal. That's what we mean by trading markets and not money.
I agree 100%. Yeah,
you want to share your screen, bro?
Sure, let's do that.
Okay. Wondering what's on your radar. I want to wish you a great 2022 coming up, Alejandro. So, great. So, let me ask the question. Do you think up there around 97, 87, if we get there, could terminate this bounce we've had from 2021 till now? What's your work saying here?
So I actually think we're going to be on closer to the upper end of this range, maybe between 100 to 102.
Okay.
So that's where I think we're going to be going ultimately. But I wanted to talk a little bit about the longer term and the shorter term dynamics of, I think, the dollar.
Okay.
And obviously, the dollar, we had the breakout here from this triangle formation in September. We pushed higher. I think that was relatively easy because you could sort of see it in the charts, and as well, we had the shift in how the Fed positioned themselves from being like not expecting any rate hikes in 2022 to now saying that they're going to raise interest rates. And obviously, that's on the back of inflation. And inflation will realistically come down a bit, I think. But obviously, maybe now in the short term, it sure looks to me that maybe the markets are well positioned and anticipating the Fed to go ahead and taper and raise interest rates. So I think at least maybe in the short term, just looking at this chart here, I don't see necessarily any strong edge for us to take a position on here, unless you wanted to sort of dive into something like a 4-hour and sort of try to treat this like some sort of maybe ascending
triangle.
I would probably call it the descending triangle.
Yeah, or a rectangle, or or what do you think? Do you know Elliott wave? I know just enough to be dangerous. How about you?
I know I studied Elliott waves, but I got hold of one of the famous books. I don't remember. I think I read the first 50 pages, and then I gave up.
I would sure like to ask, Grega or someone that knows waves, that could this be a wave 4 triangle after the whole move that we had to the upside, and that implies the next move out is a terminal thrust for a 5. I'm curious. How about AJ? Is that it? Anyway, so that's
So I think
possibility. But I mean, everyone's. I can't find it. I'm trying to talk people into saying that this is just a retracement from the COVID high to the 2021 low, and this was a bear market rally, and I can't get anyone to agree with me.
Okay.
Now, I'm just letting you know. I talk to a lot of people, right? No one wants to.
You're saying you can't find anybody that would like to sell dollars.
Yeah. There's no reason. The Fed. Yeah, and I want your opinion on this. I just brought it up with Blake. Everyone's saying, the Fed's being restrictive, but you know what? The BOE tightened.
Yeah, they were forced to. We're not used to that type of inflation in England, where I'm based.
Yeah, well, yeah.
So they were really forced to do that. It's actually quite painful. Like, everything has gone up in price, even though most people will be sitting at home, so you haven't really been spending too much money. But now, whatever money you did save, everything is much more expensive. So it hurts a bit. But my general thinking here, I mean, we don't have like a specific or very solid pattern to trade here specifically.
Right.
I think this could easily morph into something else. Now, my next step, I think here is maybe for this to trade a little bit lower then. So how can one trade that? So one way to trade this is actually to trade the Euro USD, where you do have an ascending triangle that is okay to trade. Like on these patterns, I like to trade the horizontal side only. I don't trade the trend line side.
Why?
So here one could potentially trade this to the upside to maybe 115 or something like that. And then we'll see what happens. Because ultimately, I do think the dollar is going to gain, but I would like to see it weaken a bit and then maybe buy some dollars. And I think maybe the better option to trade, to buy dollars would probably be against the Australian dollar versus the USD.
I agree, actually agree with that. And why do you say that?
Because firstly, we have, a bit of an inverse head and shoulders with head left, possibly a right shoulder here. You could maybe, if you would have drawn a line like here, that would also maybe been sufficient, like if you would have done this. But you have the pattern here, which is interesting. And then we have also the fact that the Australian Central Bank, they're not looking to raise interest rates next year. And realistically, whereas in the Fed, they will raise interest rates most likely. Like if you look at inflation in Australia right now, it's at 3%. Whereas in the US, it's at 2.68. So it's a little bit like in the UK, I would argue that, you're used to 5.1% inflation in the UK, and I'm guessing it's the same in the US. So they're really forced politically now to do something about
politically.
this. Yeah. Right. Whereas in Australia, they're not in that position that they have to do that yet. So
do you think it's going to be a policy error, Alejandro, and that all these central banks will have to reverse before the year is out?
I mean, as far as I can remember, and I also been in the market since 2005, 2006. Like every time they have started to raise interest rates, it does tend to create some sort of recession at one point. So I think that could easily be on the cards, but I don't think we're there yet. I mean, sometimes what happens is when they keep on raising interest rates after the economy has slowed. So I think if anything, 2022 is going to be a year where market is going to be quite choppy. And then maybe if we have a severe slowdown, it might come maybe 2023 or maybe 2024. Yeah.
Okay. So you're sanguine about 2022 as far as risk?
I think
equities.
I mean, it's quite interesting actually, because we have something interesting happening in equities as well. Like you have, for example, the S&P 500. Yeah, where you have an ascending triangle that is suggesting we can go much higher.
Yeah, it just broke out.
Yep. You have other things like this is the Taiwanese stock market index. I used to have this with my broker, but not anymore. So the exporting nation, they have also very beautiful ascending triangle to the upside. You have as well the Shanghai stock index, which is stuck in a pattern here. So it looks like
ascending triangle.
Yeah, if you look at U.S. stock markets like Taiwanese, Shanghai.
So U.S. is leading. It's the only one that's U.S. and Taiwan have broken out.
Yes.
Nothing else yet?
I mean, this the Australian stock market is in the process, and I think you have the CAC 40, the French stock market as well, trying to do something, but you don't have like a clear-cut pattern here. Right. So maybe what we're seeing here, maybe. Slightly weaker dollar, slightly stronger stock markets. But
how about Brazil and emerging markets, Alejandro? If you looked at those,
I traded quite a lot of South African rand. I didn't trade the Brazilian stock market, but I traded the Brazilian rand. So sorry, not the Brazilian rand, the dollar SAR. I traded dollar SAR, and I also traded the Mexican peso. I nailed that really good, the Mexican peso. So this is dollar SAR. So you have that move there.
Yeah. Pull back to breakout.
Yeah. I think
Blake showed that.
Yeah. I think if we do look at this, maybe summer next year, then I do think we're going to be higher. It's just that we don't have you could trade the breakout like I did. But I need another pattern here on a maybe smaller time frame to be really bullish. And then you have dollar Mexican peso, which I also traded. Because you have this break here. So I actually managed to get it here. And then they had some problems with their finance minister. So it pushed even higher. So I managed to nail this one really good as well. But now you're seeing it's way too deep into the pattern. And it's again the characteristic of maybe the market trading a lot of sideways and just being a bit difficult.
So it broke out and negated the breakout, which is negative.
Yeah, this is not great. So this is some of the stuff I'm looking at the traditional markets right now. Is this? I think if anything would make me really excited, it would be probably the Aussie dollar. Selling this. The only thing here though is that this thing, if it's going to come down here, it can take a couple of weeks. So what I've been doing this year and a lot last year as well is actually a lot of cryptos. Where there's still quite a lot of opportunities there, but here as well, I suspect that 2022 could be.
How do you know what coins to follow, Alejandro? I mean, there's so many. Like these are a lot of altcoins and stuff. Like, do they have a COVID coin? I see COV USD. Is there a crypto COVID? They should come out with one, and just use the picture of the virus on the coin. Huh?
Yeah,
let's do it, man.
Yeah, there's so many. So there's so much stuff, like you can come up with a coin for everything. Really, yeah. I mean, the people buying this as well, they're not maybe the most informed either. Like people just buy and then they sort of hope that it's going to go up.
Yeah.
And if
They're
you're
lottery tickets, kind of.
it is. However, though, like if you're an experienced technical analyst, it's really golden, right? Gold, because like even like stuff that doesn't, like technical analysis that does not work on Forex for many years, works on cryptos.
Crypto.
Yeah.
Huh.
So if you're really good technical analyst, then I strongly suggest
more of a pure. Could it be because there aren't as many algos?
I think it's because it's hard to put a fundamental value to this one. So it's difficult to say where a coin should actually be worth. Whereas maybe like in stock markets, you have these people that look at the fundamentals, and also obviously in currencies, you look at relative yields and relative commodity prices. You look at all of that. So you have some
cross currents.
Yeah. So you have institutional traders that do a lot of mean reversion stuff.
Yeah.
And they can do,
these are pure plays.
Yeah, these are just pure plays like that. And the trick is really try to understand what's happening with Bitcoin and maybe Ethereum. And just to give you an idea, right? So for example, this is Bitcoin. And in the big picture, we're still in an uptrend. We're creating higher lows. And we reach this level here. And
would this be a big right shoulder from your last chart? I know you noticed that.
It could, you already had a head, left, maybe right shoulder.
Yeah.
It can definitely be that. But the way I can just explain to you the way I looked at it. So it's a bit like this. So there's a lot of hit and run. I'll explain to that in a minute what that means. So for example, like here, we started to go up and started to turn bullish, and especially the break here. So what I traded something called Phantom, which is down here. So Phantom had here like a mini ascending triangle, maybe inverse head and shoulders type of pattern like that.
Yeah.
Would you call it an ascending triangle? I think that's better. Like a lot of resistance here. So when this thing broke, I did something like this.
So measured move.
Yeah. So you got yourself a reward ratio of 3.81. But the
how are spreads? Do they eat you up at all?
No.
On these, they're tight.
No. Yeah, they're
like
tight.
Like 201, 202, 191.
The thing is, you can see here, like I have a stop loss about 5.4% on the underlying.
Yeah.
And then I'm looking for 20% move. But what happened here is that when Bitcoin turned bullish, these smaller coins, like they turned crazy, up. Like 82%. So I traded
you use the majors here. For it's like you're following the majors for buy and sell signals for the junk.
Exactly. Sometimes, for example, you can do the same in silver. Like you don't have any good trade idea. You don't know exactly when to buy and sell silver. But if you have breakouts in gold, you can take the position in silver at the same time. And I can just tell you how I approached this as well in the beginning, because I was very skeptical when I started to focus on cryptos in the very beginning. But I just put a couple of thousand, I think maybe 5,000 euros into an account in 2017. And then I literally did 100% on one trade. And then I put another account in and did something similar. And by that time, I removed all my initial investment. And since then, the money I've been working with here has been sort of money from the markets to some extent.
Nice.
So that's what I suggest that you can do here. So just, and it's silly.
So you're helping the public trade this stuff?
Yeah, you could say so. I mean, I do various things. So I represent the F.A.C.E regulated broker called ATFX, and I have in the past, represented F.A.C.E for many years.
Okay.
Also,
and you're with the ATFX now.
Yes, I'm representing them. So I do a lot of things.
Are you also a broker? You have accounts that you work with?
No. It's mostly on the marketing side.
I see. Okay.
I also I manage this website. I created this website, which is like a news website, crypto related primarily, and I also do this.
investingcube.com.
Yeah, investingcube.com. So I manage a team here. So we do like a lot of technical analysis. It's a bit of a different website. It's more like your like we sell advertising, if anything.
Oh yeah.
Yeah. So it's like
that's your model. It's an advertising model.
Yeah, exactly. We do deal with like Pepperstone and exchanges, things like that. And then I have my own another project that I've been working in since 2016, where I provide access to my trading journal. So effectively, I trade 6 specific patterns. So I scan the markets on a weekly basis several times. And then I do videos on a daily basis and I explain to them, look, this is this pattern. This is why this is interesting. And when I do put a position on, I say, okay, this is what I am trading. So I also share how I am operating. And so we've done quite good for ourselves over the last couple of years.
Is that the name of the fund, Londinium?
So that's the name of the website. Yeah, londiniumfx.com.
Okay.
So I guess it's definitely not like what you guys do, because you do much more interaction and things like that on yours. But ultimately, I try to educate people or show people how to trade with my trading system. And I have quite a few people that's been with me since the really beginning. So a lot of people come here to get like additional input, like different patterns to trade and so on.
Well, you're only 25. How long have they been with you?
Sorry?
You're only 25 years old, right?
I should look like it. And I'm actually...
You look 18 there, buddy. So anyway...
go to bed early. Go to bed early. Go to bed early. Don't drink too much alcohol.
Right. Well, I've enjoyed meeting and chatting with you over the last year. Yeah. Hope we let's keep it going. And I root for you and think that you do provide a great service of classical type of technical analysis for people to learn. And you not only talk the talk, you walk the talk. So glad our paths crossed, Alejandro, and I wish you a happy new year, and that you have a great year in the market. It's a great winter trading season, and look forward to talking to you again next year.
Yeah, thank you so much, and I'm really happy to be on here. It's always nice to hear your thoughts, and so I'll be able to share what I'm doing. And it's going to be an interesting year, actually. I do think it's going to be much more challenging than the last 2 years, because the last 2 years we need to always remember we had this massive stimulus package, right? So like 2020 was my best year ever, and I did like triple-digit returns. This year just double-digit return, and I think next year it's going to be really challenging, and it's going to be interesting, actually. I do think like the sort of the community that you offer, or maybe what I do as well, is something that is going to be more needed, because it's quite funny, in these bull markets, like
everyone's a genius.
Everyone is a genius.
The tide lifts all boats.
Exactly, everybody's a genius, and I think next year, understanding how to manage your risk, and I think more importantly, understanding when not to trade is going to be key, and that's when sort of the experience of the knowledge you can get for something like what you guys offer and I offer and other experienced people offer becomes more and more valuable.
Yeah, you can't learn experience, but you can learn from the experienced.
Yeah, definitely.
I have a saying for everything, don't I?
You do.
I got a million of them, buddy. So thank you, bro. Happy New Year to you and yours. And thanks for sharing your views and your looks today with our community.
Thank you so much.
I saw some things that are interesting to me, so I appreciate it.
Thank you so much. All right. Thank you so much, and speak soon.
All right. Everyone, you know where to follow Alejandro, and his Twitter handle's AlexFX00. And Londinium is where you could find him, londiniumfx.com. And that's a wrap. Remember, everyone, don't just count your pips, count your blessings. And you could join the team in 15 minutes for the morning edge. And I'll see everyone tomorrow. Everyone's thanking you, Alejandro. All right. Adios, guys.